Hello, and welcome back to this second digital edition of Africa Oil Week's Africa Independence Forum, and held in partnership with M Ventures Limited. My name is Peter Elliott. I'm the director at M Ventures. I'm very pleased to be able to bring this second edition to you. We're very pleased to be reviving the Africa Independence Forum for those of you who used to enjoy that session. And it's in preparation for the 27th edition of the Africa Oil Week, which will be hosted later this year, of course. And these digital presentations are designed to provide a platform for independents to present on current assets, future drilling campaigns, exciting farming, JV opportunities, basically to provide you with key business intelligence to the upstream community that follows AOW. This edition then is going to be very busy and very exciting. We've got senior executives from Africa Energy Corp today, Valco, Impact Oil and Gas, Eco Oil and Gas, and Heritage Oil and Gas. All of these firms have very high-graded acreage, imminent drilling campaigns, so a lot to show you and a lot to get excited about. And then the whole series will culminate towards the end of the year, like I say, in the actual Africa Oil Week with a physical Africa Independence Forum, which we're all looking forward to. So let me introduce our next speaker, Mr. Garrett Soden, who's the President and CEO of Africa Energy Corp. Garrett has worked with the Lundin Group for more than a decade and has extensive experience as a senior exec and board member of various public companies in the natural resources sector. Mr. Soden is currently a non-exec of Gulf Keystone Petroleum and Panoro Energy. He holds a BSc honours degree from the London School of Economics and an MBA from Columbia Business School. Mr. Soden has been President, CEO and Director of Africa Energy Corp, which he's talking today, since July 2017. So I'll hand it over to Garrett to tell us about Africa Energy and the South African Oil and Gas Champion. Sounds great. Thank you, Garrett.
Thank you, Peter. I'm going to tell you about how we're playing the energy transition in South Africa. We are an oil and gas exploration company, and we've had two massive gas condensate discoveries with Total offshore South Africa, both among the top 5 global discoveries over the last few years. These are now moving into development and will play a key role in helping South Africa transition away from its dependency on coal. Africa Energy is well differentiated from other small cap explorers in 3 important ways. Number 1, our Lundin Group ownership, which has been critical for our past financings. Number 2 is our technical team that came out of Energy Africa and Tullow and has had 5 basin opening discoveries across Africa over the last 25 years. And number 3 is our world-class assets. I mentioned the Total Block 11B, 12B discoveries offshore South Africa, which give us a great floor value in the stock today with a lot of upside across the block from further exploration. We also have another Block 2B that we recently farmed out to Azanem and Panoro, and we have an upcoming exploration well later this year, which could be a company maker for Africa Energy. Quick overview of the company. We have 3 assets between Namibia and South Africa, all well diversified across 2 different play types, 3 different basins, all with proven hydrocarbon systems, and we have both contingent and prospective resource. We have about a $280 million market cap today with about $14 million of cash, no debt. We're a relatively small team with only 8 employees, and our overhead is about $3 million a year. We don't expect any material expenditures this year, so we're fully funded for the foreseeable future. And again, we have a floor value in the discoveries with Total and the potential development there, and a lot of upside from the near-term drilling at Block 2B. The first differentiator I mentioned was the Lundin Group ownership. We're one of 14 publicly traded companies in the group that all share the Lundin family as a major shareholder. We're one of the smallest companies in the group, but I believe we have the most upside. The second differentiator I mentioned was our team, and this of course starts with our board of non-executive directors, and you can see we have very good representation from our major shareholders in the Lundin Group and at Impact Oil and Gas. Our management team, Peter gave you a good introduction about my background. I think our key differentiator here is our technical team led by Jan Meyer. This is a group of geologists and geophysicists that started at Sucor, the former state oil company in South Africa. They started then Energy Africa, built that up and sold it to Tullow in 2004 for 500 million, and then stayed at Tullow exploring all across Africa. And I think their track record speaks for itself. You know, any team like this with just one basin opening discovery would be impressive, but these guys now have 5, and they've proven that they can find oil and gas in Africa. The last differentiator I mentioned was our assets. We again have the 2 discoveries at Block 11B, 12B with Total that's now moving into development. We have the upcoming exploration well at Block 2B, and we have acreage in Namibia, but we're not spending any money there. We're really just waiting for the nearby drilling this year and next year. Total has the Venus well coming up in the south of Namibia offshore Q3 this year, followed by a Shell well nearby, and potentially other wells in the Walvis Basin near us that could de-risk our acreage there. But today we're focused mainly on South Africa, and the reason, of course, for that is because of the very good commercial terms. Less than 30% state take. South Africa is a very large market, second largest market in Africa after Nigeria, almost 60 million people in South Africa, English speaking, very good infrastructure from the mining sector, but it's a frontier oil and gas location. There's no oil production today. There's only a small amount of gas production offshore Mosul Bay. And there's been a lot of activity recently. We've had the first deep water discovery with Total, but there's been a lot of farm-in activity. You can see Total is building a very large acreage position. Shell has a position, and others are waiting to see how our discoveries progress, and also waiting for the new petroleum bill in South Africa that has been announced and we expect to be put to Parliament this year. Our Block 11B, 12B should be grandfathered for any changes in that bill, but obviously legislative certainty will attract additional foreign investment to South Africa. And importantly, South Africa is signed the Paris Climate Agreement, but today is dependent on coal for more than 80% of its power generation. So South Africa now has a great domestic solution in our Block 11B, 12B with Total and the gas condensate discoveries there to help it transition away from coal. And we have the most competitive solution compared to importing LNG or importing gas from Mozambique by pipeline. I'm going to start by talking about the 11B, 12B block, because this is a very special asset for 2 reasons. Number one is location, location, location. This is probably the best place of anywhere offshore Africa to have a gas-related discovery, because you're just offshore one of the largest markets, but you also have existing infrastructure and gas demand nearby. You can see that there's a gas pipeline 70 kilometers away that currently feeds in gas to a gas to liquids facility onshore that's today buying gas at $6 to $7 an MCF. Nearby that facility, there is a power plant that's currently burning diesel, but would like to switch to natural gas. So between those two facilities, we have over 300 million cubic feet a day of gas demand nearby. The second reason that this is a special asset is because of the geology. We originally identified 5 giant prospects across the Padavisi Fairway on 2D seismic. And these were kind of a textbook case study of what exploration is like to see on seismic, with direct hydrocarbon indicators, AVO conformance to structure, and flat spots. Really the best thing our technical team had ever seen. We drilled the Brulpada discovery in 2019 on 2D seismic, and then we followed that by shooting 3D seismic across the Padavisi Fairway and 2D seismic to the east to identify additional leads. We then came back and drilled the Leopard discovery last year, better than expected, and we've now de-risked this entire fairway, both at the primary and secondary level, and we've identified additional prospectivity across the block. And the block is huge. You can see almost 19,000 square kilometers. You can see the original 5 prospects identified in the Padavisi Fairway and how those compare physically to the size of another giant oil field, Johan Sverdrup, in offshore Norway. And then you can compare the commercial terms, South Africa with less than 30% state take compared to Norway at 75% state take. So this is a really compelling value proposition here, with pre-drill estimates for each of these prospects around 500 million barrels plus. So we have multi-billion barrel potential across this block. A lot of that's been now de-risked. And when you look at the value, if you build out a model of the development scenario here using $60 oil and $6 an MCF gas and discount that back, the present value of a discovered barrel is worth more than $5 a barrel here. And so Africa Energy has the right to 10% of this block, multi-billion barrel potential, each barrel potentially worth more than $5 a barrel. If you do the math, you can see that just this asset alone is worth a large premium to our current market cap. Let me tell you quickly about why the Leopard discovery was so exciting. We drilled this last year in 1,800 meter water in about 90 days in the difficult winter conditions offshore South Africa during the COVID lockdown. Total and the service providers did a great job of delivering this well on time, under budget, without incident. There was almost no downtime, no disconnects, and the results speak for themselves. 73 meters of net gas condensate pay, that's double the net pay we found at the main reservoir in the Brulpada discovery the year before. And we have excellent permeability and porosity, very good flow rates with 33 million cubic feet a day and almost 4,300 barrels of condensate per day, liquids, very valuable liquids that trade at a $2 premium to Brent. So we got very good condensate yield here of over 100 barrels per million cubic feet. And importantly, these flow rates are on a restricted choke and limited by the surface equipment. We expect the absolute open flow potential here would be almost 10 times this rate. And so we got very good productivity, better than expected reservoir connectivity. And what that means is that we'll need less wells to produce this resource, which of course decreases the estimated development cost here. Here's a cross section of the 2 discoveries and the original 5 prospects. You can see we've de-risked the primary and secondary level of prospects across this fairway. The next steps will likely be mainly above ground. We've de-risked the geology. Now we're focused on the development concept and the market for the gas offtake. Total is in discussions with the government on the gas offtake, and they're still working on the development concept here. A likely scenario is that we skip appraisal and go straight to an early production development for Brolpada and or Leopard. So this is a very exciting development to watch, and it gives us a floor value in our stock today. The other block we have in South Africa, Block 2B, is a different play. The previous play I mentioned was a submarine fan play. Block 2B is a rift basin play, which our team is very familiar with from their experience in East Africa. And Block 2B has 2 grabens with 3D seismic and a discovery in the southern graben. And that's where we're going to drill a well later this year. You can see the idea here is to go up dip from the 1988 discovery into the better part of the reservoir, better sands, better porosity, and drill a well, relatively easy operation, shallow water, 150 meter water, 25 kilometers offshore with benign surface conditions. We're targeting 2 prospects here that have over 300 million barrels of prospective resource. And we know there's oil in the basin from the discovery in 1988 that flowed light sweet crude oil to surface. And so the idea is to prove up more resource. This is more like a step out or appraisal well, 60% chance of success. And we have 27.5% interest in this block, and we're carried on the Gazania well. So this, again, could be a company maker for Africa Energy. If Gazania is successful, it de-risks the other prospects in the southern graben. And when we look across the block, the potential here is up to 1 billion barrels of prospective resource. So in summary, for a relatively small company, Africa Energy has net exposure to an impressive set of resources. Net exposure to hundreds of millions of barrels of prospective resource with existing discoveries that have largely been de-risked, large prospects with relatively high chances of success. We have among the best technical teams for Africa today, and we have probably the best shareholders for this type of exploration vehicle. I believe there's significant upside in the stock today. We're trading at a discount to net asset value, and we have an upcoming drilling campaign that will bring a lot more attention to the stock. So it's a good time to be following us. Thank you for listening.
Thank you very much, Garrett. Excellent presentation. I enjoyed listening to that. It's obvious Africa Energy Corp has been positioned very well with a mix of assets. I hadn't appreciated the good solid mix of contingent resources, low risk exploration in shallow water, and a little bit of blue sky in Namibia, let's call it, via the Pancon holding. So thanks very much, and I've got a couple of quick questions, if you don't mind. And
Of course.
thanks. I'm sure our audience would want to know as well. With I guess the Gazania well stands out. That's a pretty exciting inflection point, hopefully, for everybody. I know your team has been working on that for a while. You've got some good data. I guess does it come down to the rig market at the moment? I think you've got a proposed cost of about $21 million. When do you see it spudding, and will you get that kind of good rate on the rig? Do you think?
Yes, I think it's a good time to be looking for a rig. I think there's pressure coming into next year with more activity and rates going up. So I think we're at a good time to lock in a low rate. We're looking at rig rates anywhere from $125,000 a day to $200,000 a day. The challenge for 2B is the mob demob cost. Most of the rigs that can drill this well are semis and are currently in the North Sea. And so that's obviously a long mobilization, but we're looking at rig sharing options to reduce the mob costs. So we should be in that sort of $20 to $25 million total cost. And Africa Energy, of course, is carried on that. But this is an exciting well. It was our first asset that we farmed into, and we have very good data on it, both from the 3D seismic and the existing discovery from 1988 that Jan Meyer, our VP of exploration, was actually involved in when he was at Sucor. That was drilled. They actually weren't looking for oil. They were doing stratigraphic testing, drilled into the deepest part of the basin, and were surprised to find oil that flowed to surface. So this is a great opportunity, similar to what Africa Oil did in Kenya, where they proved up resource on a forgotten shell discovery from 1992. Same idea, just to go back in and drill a relatively low risk, high impact well.
Absolutely. Well, I think you're giving away a little bit too much about Jan Meyer's age there. I'm sure he'll forgive you because you've also said he finds oil accidentally. So no, that's great, and it's good to see that the Namaqualand prospect is co-located as well. So you'll be getting your money's worth. So it makes a lot of sense. So obviously we wish you all the best with that
Thank you.
for yourselves, yeah, and the team in South Africa. Moving across to the Utaniqua then. So you'll be increasing your position, or you have increased your position at the expense of Impact, I think, on the 11B, 12B block. And so you've got better exposure to that. And as you say, the terms are so good that, even at 10%, you're making probably more net back than you would in Angola, I think, as an operator. I don't know, just off the top of my head.
Correct.
Yeah. So, what would you say in a nutshell would be the enabling factor there? Is it what to do with the gas? Because it's gas condensate more than oil, I understand, or is it that the fiscal terms will have to be revised slightly to monetize that gas condensate?
I think there are two factors. One is securing the market. I think the limiting factor for this block will be the gas offtake market. The resource is so large here. The limiting factor is not the geology, and so it's probably doing a phased development to supply the existing demand and wait for the market to catch up and be able to take more gas as pipelines are built and diesel power plants are converted to gas. This whole transition that is really urgent for South Africa away from diesel and coal to natural gas. So that's one factor. The other is the current uncertainty in South Africa around the petroleum bill that was announced in 2019. Was supposed to be put to Parliament last year, but was delayed because of the COVID lockdown. The government has committed to put it to Parliament this year, and it doesn't really affect 11B, 12B. We believe that we're grandfathered for any changes, and the changes have largely been announced already, so there are no surprises. But I think Total, of course, has a very large acreage position beyond 11B, 12B, and it would like to have legislative certainty before making additional investments. So I think we have both the market development that needs to happen and the legislative certainty. But I believe Total's working with the government on both of these issues. They're committed to developing 11B, 12B. It's one of their top assets in their global portfolio. And you can see now with the complications in Mozambique, this becomes even more attractive to accelerate the development in South Africa.
Yeah, excellent. Thank you. Yeah, that makes a lot of sense. And like you say, it's a very large resource. It has the scale for any of those options in terms of commercialization. So it'd be great to watch you make progress on that. Before we let you go, I have to ask you as well, you've got, you said yourself, a super team, very well, they're quite renowned, and they've got tons of experience between them onshore and offshore Africa. So do you have anything to say about new ventures, any more growth this year in terms of maybe even some onshore African exploration? Anything to say about that?
So our team, of course, has a lot of ideas. They've looked at data all across Africa, but the Africa energy story is very simple. When we made the Brulpadda discovery in 2019, we shifted focus away from new ventures because we didn't want to dilute shareholders chasing high risk frontier exploration. And really, we wanted to concentrate on the large prospects we had with relatively high chances of success. And so that's what we've done. We're focused on Block 11B, 12B and the development there. And we're now carried on Block 2B and the upcoming well there. We're not spending any money in Namibia, but it's kind of a free option in case that acreage is de-risked by nearby drilling. And so really our focus today is on proving up as much resource as we can on the existing assets, maximizing value and monetizing. We're not going to, spend a lot of money chasing additional acreage. I think it's a great time to be looking. We were contrarian in 2015 when Africa Oil spun out Africa Energy and put the former Tullow team together as a new ventures vehicle to look for high impact exploration assets during the oil price downturn. But I think we have great assets now, and our goal is to maximize value.
Thanks. Yeah, appreciate that. And I know, given the track record of your technical team at least, but also your board there, that I think hopefully you'll be looking forward to the day where you can go out and start chipping at rocks again and looking at new frontiers. But for now, it's the South African oil and gas champion. So appreciate that, and wish you all the best. And I'm sure we'll check back with you later in the year, hopefully with a spud date or even a spud at that point.
We have a lot of news coming. Spud should be Q3, certainly by the end of the year. So we'll keep you updated.
Thank you. Thanks, Garrett. I really appreciate that.
Thank you.
Okay, well, thanks everyone for listening to our presentations today. Hope you look forward to the next edition, which will be coming at the end of the summer, and we'll let you know who will feature in those. For now, we are very grateful to have Garrett from Africa Energy Corp, and if you're interested yourselves in posting up opportunities and farm-ins and future wells, get in touch with the Africa Oil Week team. In the meantime, we'll look forward to the next digital edition of Africa Independence Forum, and inshallah, the Africa Oil Week in person later this year. I think we all missed not going to that last year, so we'll look forward to that. So I'll say final thanks to our speaker, Garrett, and we'll say goodbye for now. Thank you.